at KB Financial Group. Peter, great to have you with us. What do you expect to be the impact of these results, both from SK Hynix, lofty expectations there missed, but also Samsung when it comes to the broader Kospi?
About a month ago, maybe I would have thought that this earnings would have been a main event because of the heightened expectations and retail focus. But after the recent sell-off, the earnings would not have that much of an impact because the markets did not fall because of earning expectations. Markets are falling at the moment with the deleveraging of the retail ETFs. So as much as earnings matter, I think for the time being, we just have to watch the fund flows, retail sentiment, and the unwinding of these two-time single stock leverage ETFs.
What's been the impact of those leverage ETFs, and has some of that been flushed out of the market, especially speculative moves?
The amount of leverage ETFs, not just for the single stocks, but the entire DRAM space, not just in Korea, but you have US, Hong Kong, and even in the UK. That has really made this greed and fear phase a lot more sharper and a lot more extreme. I think you can see over the past 2 months how the speculation has overpassed the fundamental investors, and I think it'll take a while because the scale of the leverage and retail flows that has gone into these products is not going to be flushed out within 1 or 2 weeks. However, again, the fundamentals, if you look back where we were 2 months ago, fundamentals has changed marginally. A lot of the negatives that's coming out on the sector is because of the price correction that has brought a lot of the negatives coming out and overshadowing the positives.
Peter, I mean, yes, we look at the volatility in the South Korea market, but overall, when it comes to the strength of this economy, especially with these huge exports of chips, why is it that we continue to get this massive pressure on the Korean won? And will this have any meaningful impact also to the investor calculation on investing more in the Korean stock market and broader assets?
Right. Currencies matter a lot for the institutional investors. Obviously, the weakening that you're seeing in Japan, India, Indonesia, and Korea, probably the four most weakest currencies at the moment. The currency depreciation of the won, primarily driven by capital flows rather than trade. And even the export companies that really shore up the currency market for Koreans, they are taking a view by keeping their forex earnings overseas. So it is a bit of a smaller version of what you're seeing, how Korean investors, both individual, institutional, and even corporates now, taking a view because of this momentum you're seeing in currencies and equity market is so strong. One of the reasons why Korean government decided to introduce the single stock leverage ETF is because there was this capital outflow into other markets seeking greater leverage on this semiconductor theme. So it is a double-edged sword. Unfortunately, in this case, for leverage ETFs, it has been a wrong decision, and it's definitely backfired.
Here in Japan, of course, you mentioned the Japanese yen. We're still trading around 40-year lows against the U.S. dollar. Will the Bank of Japan's tightening path help supporting the currency? What can we expect on Friday?
I think Japan's got an entirely different set of problems in the sense that you're not only looking at trade flows, you have for the first time in decades, inflation. If the U.S. is wondering how they can unwind the QE after 15 years, imagine what BOJ is facing after 3 decades of excessive liquidity and stimulative efforts to try to unwind that through no choice of their own because they have to tackle inflation. So I think Japan's very interesting. I think there is a lot more going on there than even US or anywhere in the region.
I mean, we're seeing reports now that the government wants to really cut the food sales tax. What are the implications for the Japanese bond space as well? I mean, we have seen JGBs see the immense pressure here in Japan on those fiscal concerns.
I think the currency, to me, is signaling so many different trends. One of them is the fiscal stimulus that I think for the first time in 20 years, we're finally seeing concerns. How sustainable is this government debt growth strategies by governments like Japan? And I think given the geopolitical issues, capital flows being so rapid, I think BOJ will have to watch very closely what the repercussions on some of these structural shifts that we're seeing, not just for the BOJ, but the entire region.
And of course, for the BOJ, what the FOMC does will be very consequential, especially when it comes to rate differentials, right? I mean, this FOMC seems to be a very uncertain one. UBS now calling this the most uncertain imminent Fed decision in about 20 years. The fact that we're not getting that signaling from the new Fed Chairman Kevin Warsh, how consequential will this be and how live could he make this meeting?
He can take it in so many different directions, and the uncertainties is that his dovish stance going into this position, how much was that politically influenced, or how much of it is really his opinion? Nobody knows. I think so. Therefore, the uncertainty of facing the Fed is uncertainty facing the rest of the world, and I'm sure the central bankers everywhere will be watching very, very, very intently.
Yeah, traders pricing in a 1 in 3 chance of a rate hike on Wednesday. Peter Kim,